The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. Thanks for tuning in, kicking off your trading day right here with me at TFNN. Just after 9 a.m. Eastern Time, 24 minutes to go until the start of trading, and markets continue in the upward trajectory. S&Ps this morning up by 42 points, 69.52. You see the acceleration yesterday. There's your acceleration on the tariffs getting pulled back by the president. We got a deal to acquire Greenland. Do we have a deal? We don't know, but the markets think that this is, at least tariffs are off. And that's what mattered to the market, man. We're above where we were on the highs yesterday. S&P's up by 0.6%. We'll take a look at the volume in a moment. NASDAQ 100 pushing higher as well, up by almost a full percentage point, up 242 points. We're 700 points away from where we were yesterday. 700. You're almost 3% off of the lows of yesterday morning right now. NASDAQ 100 up a full percentage point. The Dow up by 0.5%. 49,497. The Dow's up 1,000 points from where we were at the lows yesterday. And the Russell right now up by 0.7%. Bitcoin chopping around near about 90,000, 89,580, slightly in the red this morning. Ethereum slightly in the red as well, off about 2%, 29.69. You know, crypto caught a slight bit on that acceleration yesterday, but not really. You know, Ethereum right back to where we were early yesterday. Right? You look at these two, underperforming and continuing to underperform. Bitcoin is right where we were. Yeah, look at that. Coming out of the session when you're talking about, early yesterday morning. So yes, you caught an acceleration, but all you did was get back to the highs of yesterday. So crypto continuing to underperform, under pressure. Crude, you pull back this morning, down 83 pennies. And natural gas, this is what I was waiting to get to. So what's remarkable is you wake up, of course, Tuesday morning, right? Natural gas is at $3.72. You reached $4 on Tuesday. Now, that was from where you closed out on Friday at $3. So you go for up 33% on Tuesday. Yesterday, you pushed $5. Today, we're higher again, man. You just went from $3 to $5.36 on natural gas as cold rips across the country. We'll talk about that in a moment. You jump over to yields. You got the 10-year right now. Excuse me. Now, here's what's remarkable here. Okay. Here's some of your acceleration on the tariff news. You got higher price and lower yield. Yields haven't reacted either. So what to pay attention to here is that markets are rejoicing, but yields haven't moved. Okay. So there's some hesitation in this equity market right now. They're buying it, but none of that is translating to the yield market. Okay. So pay attention to that one, because it's not like yield said, that's okay, we're going back to lower yield. You check out the dollar right now. Same thing. The dollar had an acceleration yesterday. Here's your acceleration on the tariff news. Doesn't matter. We're actually below that level right now. 98.61 on the dollar. Okay, now gold and silver. Gold, yeah. Come on. But again, gold pulled back on that news. There's the pullback on that news. We're right where we were at 12:30 yesterday. So the only real reaction has been equities. The gold market has not given back the reaction yet. The yield market has not given back the reaction yet, as in the reaction to those European tariffs contingent on acquiring Greenland, not Iceland, Greenland. And a little bit of a red flag when you look at this yield market, okay? Equity markets are rejoicing like we're out of the woods, right? Equity markets, you're talking about back to where we were. You're a good 100 points higher on the S&Ps from some of those levels on the yields, okay? But that's not yield. Gold not reacting. Equities reacting this morning and yesterday. VIX right now. Pay attention to that one, though. 15.99 as volatility dropping out of this market. VIX under 16, 15.99, going back to where we were on Friday in this market. All right, how about natural gas, man? You check out the volume on natural gas. Right up to the highs of December. Now, in technical analysis, folks, it's not as difficult as it needs to be sometime. All right, if you're fortunate enough to be in this ride up in the futures, what are you hoping for? Okay, where are you looking? I'd be thinking about selling right now, okay, unless you're talking about going back to 2022 craziness on natural gas, which is possible. But boy, you just went from $3 to $5.50. The highs from earlier in the year, $5.49, and we just hit $5.57. Now, on a volume basis, you could break it, but we're going to have to be above those highs, and it's only Thursday. You're going to have the volume. We've done 850,000 contracts right now. You're only coming into 1.06 million and 1.174. We got 2 full days of trading left in this market. But yeah, technically speaking, folks, okay, if you show anybody a chart like this and you say, hey, where's a potential area if you're long natural gas that you could face resistance, right? Don't overthink it. Okay, it doesn't mean you have to sell out at that, but you better be aware that we just rung that bell. We've backed off a bit. We're already 23 pennies off the high. And man, we got some action in natural gas. And yeah, we got cold everywhere, even in Florida. For our averages, even in Florida. But guess what? In other areas of the country, man, how about Austin? 16 degrees. 25 degrees colder than normal. And, you know, we're not hitting 16 degrees in Florida, folks, but 25 degrees. Okay, and as they say, will be one of the toughest tests of the state's electric grid since the system collapsed during the deadly 2021 freeze. And here's some of the run-up in 2021-22 on energy prices. You did hit about $6 in 2021. But yeah, you're talking about electric, you're talking about the electric grids, and you're talking about, again, they expect it to endure, but we will see. And unfortunately, this is where, you don't got heat in a storm like this. You got family out there, folks around that area. Make sure that they're okay, whether you're talking about parents or whatever it is. Because, yeah, you get that type of cold, man, and people run out of heat. 240 people, unfortunately, are what died in February of 2021. Yeah, that was right at the beginning of that run. Look at that. Back then, you got that little peak, and then things really followed in the energy markets. Peak demand, 82.6 gigawatts. That surpasses last year's high of 80.2. They expect, I love how it's always, right? We expect to have sufficient supply of 93.3 gigawatts. 1 gigawatt is equivalent to a traditional nuclear reactor, so put up 93 of them. We'll see. 40 gigawatts of new solar and storage capacity added between 2021 and 2025. So power lines and trees. Dallas is going to hit 8 degrees on Sunday. Dallas, get your cold weather gear out in Dallas, man. Houston near 22. Snow is potentially going to hit, and that's where, you get these certain areas. We're all familiar with Atlanta. They cannot handle snow in Atlanta, and there's certain areas like that as well in Texas. And yeah, it's only going to be a quarter to a half an inch, but guess what, of ice. Yeah, which can snap those tree branches, drop power lines, and what ends up happening is when you don't have that happening in a while, it's somewhat akin to the fires and brush, right? As in you have all of these small branches, right? Nothing's been cleaned out by a good freeze for a while, and man, they're facing it today. All right, we're coming back. We're talking about GDP, folks, and we're talking about jobless claims. S&P's up by 45. We'll come right back.
Looking for potential trading setups in the stock market? Then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps right now up by 46 points, and we jump to some of the economic news this morning. You jump over to GDP. GDP numbers, 4.4% pace in the third quarter. That's the revision. So the economy expanded at a revised 4.4% pace in the third quarter. You jump down to the numbers, 4.4%. The prior estimate was 4.3. Okay. Now what happens is this is actually helped by exports here. Okay, you get a bigger number, of course. If you're producing more and exporting more, you're going to get a bigger GDP number. Strongest back-to-back quarters of growth since 2021. Now, you remember in the first quarter, the number was abysmal. But that was because everybody imported everything to get ahead of all the tariffs, right? So you had all these massive imports, which deduct from GDP. Because GDP is about what you're making versus what you're importing, right? Your gross domestic product. Well, you have to subtract your imports. You get to add your exports, okay? So we're still kind of meandering off of that huge acceleration and the bring forward of imports. And you're seeing that still play out a bit with back-to-back quarters. Strongest back-to-back quarters of growth since 2021. The real test is going to be if this can continue now that we're past some of that tariff volatility where you pulled forward all those imports. Imports dropped down dramatically in the second quarter, and they're still helping out those GDP numbers in the third quarter. Okay. Personal consumption expenditure price index, 2.9% in the third quarter. So prices are still rising, man. Period. Consumer spending 3.5%, big number out there. But strong numbers. Business investment 3.2%. But yeah, price is still a problem. Period. End of sentence. You're almost at 3%. You jump over to jobless claims. 200,000. Now that's a decent number. Okay? The tough part is, how many jobs are we adding right now? All right? We'll see. And in the part of a healthy economy, you're always going to get churn. Okay? We increased to 200,000, just off of where we were. That's January 17th. The market was looking for about 209. And you're chopping around about 200,000. So healthy numbers on the jobs front and healthy numbers as well when you're talking about on a GDP. Excuse me. All right, you talk about lobbying. Really small numbers compared to what's going on in terms of buying influence. The biggest tech companies, it's remarkable that you say, they spent $109 million on lobbying last year. Meta, the biggest one. I asked myself why they're not spending more, and they are spending more in other areas, all right? This is just straight out lobbying. But yeah, Meta, upping it from 24 to 26 million. Amazon stays at around 17. You see the numbers there in terms of the tech giants. NVIDIA, they go from only 640,000 in 2024, and they up it to 4.9 million. Yeah, remarkable numbers. QCOM actually goes down. Oracle actually goes down a bit as well. Maybe the Oracle money is all going to lobbying for Paramount Skydance in 2025. I kid, but only half. Microsoft, a slight dip. Intel, not surprising there with what they had going on last year. Intel ups the ante, but Meta, Amazon, and Google. I mean, pretty remarkable, right? You add all those companies up, and that's almost half of the spending, because you come in at what, 120 something? What's the number? 109. Yeah, 109, and those companies are about half. Those three alone are about half. Remarkable. All right, let's jump around to some of those tech companies this morning. You jump over to NVIDIA. Up by about 150. We still got Davos going on, getting some headlines out of Davos. Microsoft shares up by about $4 to $4.48 right now. We jump over to Amazon shares. Catches a bid from $226 yesterday to $234 right now. And you jump over to Netflix shares after their earnings yesterday. 85.73, basically flat. You jump over to Disney. Disney caught a bid yesterday, flat this morning right now at 113.09. All right, we jump over to Procter & Gamble. So Procter & Gamble out with their numbers. You see the volatility this morning. You dip lower, you trade higher. We're trading at 147 right now. This thing's been under pressure. You broke out of this channel line. Check this out. You go back. Look at this channel. Okay, that started in 2018. You touched that channel line on the COVID lows. You touched there in the 2022 pullback, and you've been chopping around. And yeah, we are at a critical area for Procter & Gamble, folks. You see, this area was an area of resistance to the upside, talking about 140, okay? And that was the area, got a little bit of support. I mean, that area, we traded up there in 2020, and basically, it took a solid 3 years before you broke away, and we're back right now. And pretty remarkable that Procter & Gamble, is flat for almost 5 years. Just longer than 5 years right now. So it's been under pressure. And the one thing about this equity that stands out, look at the ramp up in volume on this decline. Okay, capped off by December. Now we'll see if we can get a bid with some volume. We got some volume going so far. It's January 22nd. We got about 5-6 trading days. Well, how many we got? 7 trading days left if you include today. Okay? And but volume-wise, you did 234. We're going to do some big volume today. We sure are. We jump over to Procter & Gamble. Yeah. Declining demand for its razors and diapers. They make a lot of money with razors and diapers. They revised the earnings outlook, though, for the current year. $1.88 versus $1.86 revenue, slight miss. You can always tweak the earnings per share. Okay, there's a lot of accounting tricks that are legal that you can factor in. Depreciation is one of them. Okay, so you can always tweak the bottom line. You can't tweak the top line. And the top line they missed barely, but they did. 22.21 billion versus 22.28. Net sales rising 1% to that 22.21 number. Volume, though, falling. Yeah, 3 out of its 5 product categories, shrinking volume. So they're selling less goods. The only reason they're making more is they're jacking up prices, period. End of sentence. That's the end of the story. I kid. We're going to keep going. But it is. Okay, they missed on revenue. Their volume's going down. Be careful on Procter & Gamble right now. And this quote, right? People have not stopped washing their hair. They still buy diapers. They do their laundry, albeit at a little bit slower pace. I don't believe this, okay? They're losing market share, period. We're not at the stage of the economy, folks, that people are consciously changing diapers at a slower pace. We're not at that pace of the economy where people are washing their hair less often to save money on shampoo. The market growth has slowed over the last 18 to 20 months. Pay attention to that chart. Pay attention to the volume, price and volume, all right? And yeah, you're listening to that CEO out there tell you that it has nothing to do with them. But yeah, the grooming business, 2% drop in volume. You better believe they're facing competition. We're coming right back, folks. We'll talk a little Harry's. I actually went to high school with one of the kids that started that Harry's brand. We're coming right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstadt's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstadt releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got equities open. You got Procter & Gamble up by 1.7% on their numbers, 148.52. You jump back to the S&P up by 43 points right now. We get some strong GDP numbers. You're also dealing with jobless claims. They come in 200,000 light numbers, and markets open. We're higher. We'll see how we go throughout the day. You jump over to metals right now. Gold off by $3, 48.33. We take a look at some of the volume in the metals. 2 extraordinary days to the upside on gold. And as I mentioned, okay, the markets are rejoicing like nothing happened with the tariffs with Europe, but that's not the case with metals, okay? You still have a premium built into metals. You still have a premium built into yields as well. So yes, equities have rejoiced, but we have not given back the move in metals or in yields. So one of those is going to come back to it. Okay, either you're going to have a give back in the metals and the yields prior to that escalation, or you're going to have a give back in the acceleration we just got on equities. So keep those spikes up. You jump over the VIX right now, and we got the VIX sitting down $1. The VIX is saying we're going higher, man. Okay, the VIX is always telling, keep your eye on that VIX, and right now the VIX is saying nothing's getting away this market, but keep your eyes glued, man. We got a big day in Davos again, and you never know with the headlines and the pace that they're coming right now. All right, jump over to private credit. This one's Blue Owl, all right? Talk about under pressure, man. Blue Owl, back to 2021 prices, quite an epic rise from 8 to 26. And yeah, you're talking about this headline here, okay? Private credit investors are cashing out in droves. Redemptions by individual investors in funds soared at the end of 2025 after performance declined, reviving questions about the sustainability. One of those, Blue Owl, got redemptions for about 15% of the shares. That created a whole problem for them. And yeah, private fund managers, individual investors are falling into a familiar pattern of selling out when an asset class underperforms expectations, and that's what's happening right now. Dividends are going down, and you better believe there's risks. Total returns from the 5 largest private credit funds aimed at individual investors declined to 6.22% in the first 9 months, compared with 8.76% in the same period in 2024 and 11.4% in 2023. Man, if you're in private credit and you're only getting 6% returns right now, you should think about getting risk-free returns of almost 4% in the CD market. And I'm being real. There's a lot of risk when you're going into that private credit markets right now for that extra yield that you're getting if you're only pushing 6%. And guess what? The trend is lower, right? That was the first 9 months of 2025. Yeah. That data is almost 4 months old right now, and realistically, that data is as long as 13 months old when you look at that number. That's an average that includes data from over a year ago. And look at the trend, 11.4 to 8.8 to 6.2. Yeah, the money managed by some of them have tripled. BDC, $450 billion, tripling. How about that? The fund still took in more money from new investors than they paid out. Okay, they're popular among investors. Nevertheless, this is what, yeah. Whether it's the real estate funds, right? These private credit, it's a problem when it comes to liquidity, and that's the real issue here. And they're gonna, eventually, you just can't give the money back as quickly as people want it. And try and keep your 401ks out of that money if you're not fully aware of what's going on. Yeah. Managers of the funds say all investors should own some of their funds. That's literally what it is, right? Because they can deliver higher returns than stocks and bonds and diversify. High fees, and you limit how quickly you can get your money back. And I would be very skeptical, especially right now. You're getting returns of 11.4% in 2023, even 8.8% last year. Big numbers, man. 6% right now, and who knows what that number is right now. Okay, and that's the other part, is that mark-to-market prices in a private market is always difficult. That's price discovery is the most important thing if you're talking about safety of your funds. Because, number one, you're talking about an industry where there's not the clarity of price discovery that there is in other markets that are more transparent. And that's especially true when you could get a rush on taking that money out, and then they have to figure out how long it's going to take for you to get that money and what price they're going to give it at. All right, we jump over to Google shares. Quite a year for Google last year, quite a day for Google yesterday, and today you're up by another 1.8%. Now, they are really pushing forward with Waymo, man. It's coming to Miami. The company's first new market this year. This is the 6th market that they'll be in service. Dallas, Denver, Detroit, Houston, Vegas, Nashville, Orlando, San Antonio, San Diego, and Washington all coming this year. Over the next 12 to 24 months, man, there's going to be self-driving cars in almost every large city in the country, okay? So they're going to be offered, 60 square mile area that includes Miami. I mean, think how much you cover when you do 60 square miles of the Miami area. Think about the population you're covering. Nearly 10,000 residents in Miami have already signed up to try out the robotaxi service. And here's where they are. You got driver testing going on in Tampa. You got commercial robotaxis in the black here. And then you have the plans for 2026 that I just discussed. Currently, they're in Austin, Atlanta, LA, Phoenix, and San Francisco. In December, almost 500,000 weekly paid rides, 14 million trips last year, 14 million self-driving trips. I don't think a lot of people, if you weren't in the market, would know that, right? Of how quick. It's always technology moves a little bit quicker than we can even envision. I don't think a lot of people, if you ask them if they weren't watching the market every day, how many self-driving trips took place in the country, they would not give you a number above 10 million. I don't think they realize that we're there just yet, but it doesn't take a lot when you're in some of those big cities. Tesla shares up by 0.4%, but yeah, it's going to be a real competition, man. Tesla pushing it out, but Waymo's in the lead by a dramatic fashion right now. Google, you're almost at all-time highs again, up by 1.8% right now. Microsoft up by a full percentage point. Amazon up by 0.8% right now. Jump over to some of the banks. JP Morgan. All right. See if we can find a bid. That was quite a sell-off, of course, on earnings last week. Banks struggling from 337. You catch a bid today. We'll see if we get some volume right now. No volume just yet. Not a lot of strength in these banks right now. It's been quite an acceleration higher, and they probably need to breathe a little bit. You're talking about JP Morgan goes from 133 to 337 over a period of 2 years, and your only pullback was the tariff pullback in April. Yeah, and it was a heck of a pullback. Jump back to gold. Excuse me. Got quite a weekly chart going on these metals, man. We might break above this high with volume. We'll see. We got 2 full trading days, and we're already almost at 1 million contracts in gold. Gold up by $9 on the session. You jump over to silver, up $1.53. Silver holding up so well. And we jump to natural gas, up by 11%, $5.41, right up to the highs of last year. We'll come right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Markets remaining higher. S&P's up by 46 points. That's about 0.7% right now, trading at 69.55. We're only about 80 points away from the all-time highs made last week. NASDAQ 100 up 185 points, 0.7%. The Dow up by 0.8%, and the Russell up by almost a full percentage, leading the way. Russell right now, you're only 6 points away from those all-time highs on the Russell. Basil's had some great calls, folks. He's coming up next for the Tiger Technicians Hour. I talked to him on Tuesday afternoons. He says some great calls, whether you're talking about the Dow, the Russell. Stay tuned for Basil. Coming up next at 10 a.m. Eastern Time. All right. Crypto. Yeah, crypto cannot find a bid right now. You look at this chart. You look at the volume. Okay, we got tremendous selling coming in the market on Tuesday. Look at that lift. We got nothing. There's no reprieve whatsoever here. You have all this volume, and if you are a Bitcoin bull, okay, maybe you put your back against the wall. You put a stop down here, somewhere around that November low of 80,000. That's a daily. You jump over the weekly, right? There's your November low. Here's the lows in earlier in the year. That was your tariff lows of 80,000, okay? You break below there, we're probably going back to this consolidation of 2024, which is remarkable because you're talking about that's where we were prior to the election of a very crypto-friendly administration that's made billions for the family of the president itself. So remarkable, you got Bitcoin almost back to where we were prior to the election. Now, that number prior to the election was 67,000. We're at 89,000. But this market cannot find a bid, no volume right now in crypto whatsoever. Ethereum, even more pronounced, right? Look at this selling. Look at the volume. Can't find a bid. Yeah, you IBRX holders, congrats. It just keeps going. 828 this morning, up another 13%. On biotech equity, we take a look at the volume on this thing. Now, 2 days ago, right? You make it up there, you give it back. That was a lot of volume on that day. We'll see if we can do it today. You're touching that area, you get above it right now. A little bit parabolic, to put things lightly, folks. All right, you're going from a price of $2 up to $8. So get a plan and stick with it. That's what I encourage you to do. If that plan is to hold it longer term, fantastic, right? If you're thinking about selling it, you got 4 times your profits, man. Maybe take a little off the table. If you're worried about selling anytime soon, and yeah, it is quite a number, man. Let's do it. We'll jump to the monthly. It's a big number, for sure. But doesn't take away the fact that you're going parabolic. Okay? And that's where you get a little worrisome, man. Anytime you get that type of acceleration, every day it's going up. You see it with Goro, okay? Goro, great trade by Mike, taking some off the table when you can. Look at that volume, look at that volume. You take a look on the monthly, and that's tremendous volume on the monthly. It's real. But boy, within the span of that, you just went from 238 to 95 cents on that monthly. So you got a lot of speculative equities. Goro up by 20% again today. But boy, that was quite an acceleration yesterday from 238 to 95 pennies. And I agree with you, Mike. Some of those, he got out of it at like 182, half of the position. Kudos to him. You step back in at 95 pennies. He said, if I had saw it tanking, I probably would have gotten in earlier, right? And you know why? I agree. It's a great comment. Because nobody ever thinks you're going to go from 238 to 95 cents in a day, folks. Nobody, right? So you sell out half your position at 182, something like that. You trade lower. You say, man, this is a bargain, man. I just got out at 182. I can get back in at 150. I can get back in at 140. I can get back in at 130, 120, 110, 195. Can always move faster and further than you think. All right, so in the longer term, if that's what you're holding, set it and forget it. Right? Set it and forget it. What's that? The rotisserie oven. What's the name of that rotisserie oven? You set it and you forget it. Oh, shame on me for not remembering those things. Remember that? Rotisserie. Oh, I should have it. Come on, somebody give me that number of that infomercial man that made the rotisserie. We'll get there. Ronco. There you go, man. Gotta love those old infomercials, right? They were so good that you could actually be entertained watching them. That's true salesmanship, man. That you weren't even buying the Ronco rotisserie and you were just watching the infomercial because it was so entertaining for the guy doing it. Set it and forget it, baby. There you go. All right, we jump back to the VIX right now. Yeah, we got a little spike from the lows. We're at a 5-something handle, but yeah, we got something going on right now. As Dudette says, news, something? We'll see. It's quite a day, quite a week going on. Not necessarily news-driven just yet, but yeah, it doesn't look like a big move because we just went up so far, but the S&P's just dropped 20 points in the span of a heartbeat. We got the VIX spiking a bit. You got the NASDAQ backing off as well. We're not out of this volatility, folks, okay? As I mentioned, yields have not given back any of the reprieve. Okay, so don't think that this market is just over the threat of tariffs with Greenland and the instability and the volatility that comes with it. Yields are right back to 4.3%. Okay, no reprieve whatsoever. And as we're talking, they're going down to lower price and higher yield. Actually, we're at 4.27, excuse me. 4.27 to be exact. We were at 4.3 down at some of these lower levels. Maybe it was down here, I think, when we were approaching 111.09. Nonetheless, yields are up. Okay, yields are up. We're right back to where we were before. I mean, think about that. Think about how important that tariff news would be. And yeah, we might got something going on. Either that or we just got selling in the market. Lower price, higher yield for the 10-year right now. You jump over the 2-year. Yeah, same thing. Lower price, higher yield on the 2-year. You jump over the 30-year. We're sitting at 114.24, down by 7 ticks. Let's take a look at the yield curve. Right now, you got the 2-year at about 3.61. You got the 10-year at 4.27. So about 66 basis points of steepening between the 2 and the 10-year. And your 30-year is at 4.88. That's going to be one of the focuses this year, what kind of steepening we get. Jump back to gold on this market move. And yeah, gold gets us a little bit of a lift in that move. So we got markets pulling back on the open. We have yields going higher. And we have gold going higher as it's a risk off. Same deal. Risk off as the VIX is inching upwards. Check on Procter & Gamble on their numbers. You're up by 1.9% right now. We check back in on Netflix. Giving back some of those gains off 1.5% from the acceleration of yesterday after that. Now, Netflix came into their earnings at 88. You went as low as $80 almost yesterday. Now, when I was talking about Netflix here, you're right back at the lows of last year. That's your tariff low. 82.11. 82.11. You got to 81.93 intraday. You were below that pre-market. You take a look at the weekly. And same exact thing. Don't overthink it sometimes. This is a critical area of support for Netflix. Where you found a bid in the beginning of last year, it's where you found a bid at the tariff lows of April. Okay, and you're flirting with that level. And look at the volume on a weekly. On a monthly basis, not as pronounced, but we got a whole, 7 days of trading days left this month on Netflix. Jump back to some of the streamers. Disney, Just chopping around for Disney shares. Warner Brothers pegged somewhere near $28, $27.75. Remember, they're getting $27.75 all cash deal from Netflix. Then they get to sell the cable networks as well, which is why that number is actually bigger than the number Paramount is putting out there, which is for the entirety of it. Paramount catches a bid with the market, up by 1.4% right now. S&P's up by 25. One more segment, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the S&Ps up by 31 points right now, so no big sell-off. You get a little bit of a bounce there as well. We're right back to where we were at almost about 7 a.m. this morning on the S&Ps, up by 32 points right now. We keep our eye on the VIX, that volatility index, 1602. Yeah, as long as we're chopping around near 16, keep your eye on that VIX. All right, as you can always have, it's a leading indicator in many situations. As people start paying more for the price of premium to protect themselves when there's a risk the market may go down. It's just that simple. Now, man, ICE in Minnesota, okay, doesn't get more, unfortunately, politically controversial. But I don't understand the support for this one, folks. Unreasonable search and seizure. Do you have a warrant? is like the oldest, most reliable constitutional protection we have. And ICE agents are now just going to be able to enter a home without a warrant. Okay? It's a new policy. They put out a memo. Okay? Immigration officers assert sweeping power to now enter homes without a judge's warrant. Now, what you're going to hear out there is that they're going to get a judicial warrant. Okay? Immigration judges, unlike most judges, are Justice Department employees who must follow the orders of political appointees. Folks, what's going on? Okay? For all you constitutional patriots out there, now they're going to say that they're entering homes of immigrants that have overstayed their deportation orders, etc. Okay? But who gets to say that? You can't have the people that are policing being the ones that are signing the warrants themselves. It's remarkable that now we are approaching that they're going to start banging down doors with warrants signed off by the Trump Justice Department, as if somehow that is akin to having a warrant to break into people's homes. Okay, and those federal officers are going to be masked with complete immunity. We do not want masked federal cops banging down houses without warrants that have immunity. No matter what side of the political spectrum you want or you fall on, folks, you don't want that being a right the government has in perpetuity. And it's not in the Constitution. We'll end on that one. S&P's up by 25. Basil's coming up next.